whatever you want to talk about. I just saw my thumbnail for the first time. I don't make most of them. Alright, I had to change mics. Let me know if this microphone is actually working. I did a couple little tests, so hopefully. I actually tried to do a video with Logan last week, and that's like right when it went kaput, right after a Zoom meeting. Alright, says things are working. It shows some audio. If anybody can just let me know, is this dang thing coming through? It'd be awesome. Because there's like, especially when you don't do this all the time, it seems like there's so many settings like everywhere. Especially like the first time it was pretty easy, plug and play, and then I had to get rid of it, switch over to like a backup, and now I'm trying to operate on this one, so hopefully it's okay. Where's my live chat? So I hope you guys are. I'll just talk until somebody tells me you guys can't hear me anyways. All right. Awesome. I've got a new fan. Been following me for a couple weeks now. I wanted to know if you were adding money when you started with 570. No, I've never added any money. I've only taken out money. Taken out $50-some thousand from when I started. But I think maybe like a couple times just to like cover a couple things, like I put it in and out. I did it for Doge because my girlfriend really wanted me to support her by buying some Doge, and all my money was spent, so I think I did it then. But then I pretty quickly sold it and then just took the money back out. But all in all, I've mostly just taken money out. So that initial 575 when I was like gambling with what I felt like, 100% I was gambling with options. When I was gambling with them, I didn't want to lose any more than that, and then everything obviously like worked out really well, especially with the market tanking. Yeah, so so you followed me since 1 week of normalcy, and then this last week where I just felt like crap. Still kind of feel crappy today, and I don't know, hopefully this is like the little bit of the last of it. At least I hope so. Actually, this week, so and then it was funny because like the 2 days when I was just feeling like crap, and it's been well over a year since I haven't followed the market like and watched at least once an hour exactly what was going on, or watching news or something like that. So this is the absolute first time, and then it was just like down for those couple days, and then when I was feeling better, market came back, or at least Tesla did, so most all of my plays came back. So I think it helped me recover a little bit too, like feeling better about the market, feeling better about my account. And the funny thing is, I didn't see any reason why anything should be doing, or why Tesla should be doing so good, other than maybe some of the short guys got out, or I'm also like my tinfoil maybe could possibly happen. Maybe people are expecting Elon to say something during Saturday Night Live, or something to happen there. I don't think so. So if anything, if that's one of the reasons, then Monday, no good. And I was gonna ask anybody here, since it's such a super popular stock, NEO. Anybody who's in NEO right now, how do you guys feel about it? And I'm asking, so yesterday yesterday my girlfriend told me she bought some $42 calls, like some super expensive ones, spent a bunch of money on them. I haven't been following them like ever since I figured out they're probably not the company for me. You know, I know they're touted as the Tesla of China, but I think Tesla is the Tesla of China. So I was just looking at that chart right now. Hope she does well. I think she put, what did she put in there? It was like, I don't know, she bought 10 of them. It must have been 250. She has like 2,500 or $4,000 or something like that into those. I'm just like, why are you doing that company? It's one I don't even like. I'm not even very bullish on it, but can you still roll for a credit if the price hasn't struck the short? Yeah, totally. You think Neo's tanking next week? Oh god. Crap. Yeah, totally. You can still roll for a credit if the price has not struck the short. Definitely. And rolling down or up, you could do either one. You're gonna get a credit. You're gonna get a credit either way. The only time where you're going to get in a situation where you have to debit is if it's, and let me make sure, hasn't struck the short. Yeah. So as long as it hasn't struck the short, even if it's like a little bit into the short, you should always be able to roll it for a credit and probably down a little bit. But if it's like below the long, if you roll it out far enough, because time is money, you can still get a credit a lot of times, or maybe pay $1 or $2. But if your strike, if the underlying goes, you know, quite a bit below your long, then yeah, you're probably going to be paying to roll that out a little bit. You have an indicator on your TOS that tells me price reversal. Is that just like one of the basic tools on there? 37. Oh, so it's gonna hit the low that it was at yesterday. You think so? I hope not. Is it gonna, so do you think like, is it gonna hit 37 and then cruise back up, or 37 is gonna be the new level just for a little while? I think their market cap is ridiculous. I mean, I know Tesla seems ridiculous, but at least they have I think a plan and a way to grow into that valuation, where Neo is just straight up a car company and may or may not make it. And I'm wondering, let me see, is it just like one of those studies, the reversals? Is it a price reversal? Price zone oscillator, price ratio. There's so many indicators. 37 and back up. Cool. I hope so. So she bought it for June. The expiration is June 4th. So hopefully she'll do okay there. With 70K available in my portfolio and being bullish on Tesla, would you recommend entering via a cash secured put or a long leap for a poor man's covered call? Ooh. 70K. Oh man. Well, just selling the put, like that's probably 20% on your money annualized if you always sell it at the money, which I've back tested that, and I've seen it back tested. Oh, I think I would do, for me personally, I think I would do the poor man's covered call. The thing that always sucks is selling the calls on them, but that's what I would do. That's what I just did with Palantir, because that's something I'm bullish on. And so, like, if you're asking me what I would do, both are definitely super good, or just boy, but such a tough decision there. But that's what I did with Palantir. So I just used the poor man's covered call because I know I want to own those. I want to own those shares eventually, so I just bought the $20 call, I think, is expiring June 2023, and then I'm just gonna sell against it along the way. But man, so much premium for the selling the puts. I think that would be super awesome. You could actually just run the wheel on it. The only thing that totally scares me, David, with Tesla in general is just it shooting up. And I mean, the poor man's covered call, at least you're protected on that end. But if you're just selling the put, and let's say, okay, great, you're selling the 700 and then it goes up to 900 and never comes back down again, that's what I'm always scared of. It's probably not too legitimate. Like, it seems like it's kind of found its little area, but I'm just scared of that next shoot up and that poor man's covered call. I think for me that would be the right thing to do, especially if you can do it in Europe. What's up, Joe? Where do I look to find stocks that have high premium and high volatility? I usually just do ETFs and Tesla lately. Well, if you're paying attention, like if you're paying enough attention in the market at all, it's anything that you know is moving. I mean, that's pretty much why I like Tesla. It's just, I know it's volatile. I think I know where it's headed in the future, and there's not quite another one like that. I mean, I guess Amazon is super volatile the last couple days. And then ETFs seem to be the opposite of that. So like ETFs for that super safe but low premium kind of plays. I mean, you still get 10% or so pretty safely for 4 weeks, 3 weeks, 4 weeks out. And then you're going to want to do it on something that you have at least an idea of where you think it's going to go, because you don't want to just play just because it's volatile. You want a company that you have some sense of the direction, like doing it on AMC or GameStop or something that's moving a whole lot, and you have no idea whether or not you're just going to put all your cash at risk and then all of a sudden it's going to lose a ton of value. That doesn't make sense to me, and that's of course one of those other things that has me gravitated towards Tesla. Like, I think I know where it's going to be in a year from now, 2 years, 3 years, and that's definitely not sideways or down. So then I can comfortably roll out those calls or the credit spreads and know, like, eventually, okay, so if it's not this week, I mean, yesterday obviously we had that super cool pop-up, but I was comfortable like with my 690s, 680s, and I could just keep rolling those out. Like, there's no doubt in my mind the end of the year it's going to be up there, or it's just like a matter of time. It's not indefinitely. I don't think it's going to go down to 500 and stay there. Like, that's just not going to happen. You can send me a script for the indicator. Yeah, that'd be super cool. I use a squeeze set sometimes for that. When I have more time to actually day trade, which I really like. I heard there's a script for it too, for just like high and low indicator, which would be pretty cool. I love Thinkorswim. Okay, so 37 and back up for Neo. Let me see. I was just looking at this. Am I in the way? Yep, I probably am. So what's happened? So I guess it fell with the rest of the market, and then it's just kind of looks like a bit of a wedge. So do you think that's like a wedge and then shoot back up? It's kind of what it's looking like. But it definitely has that support way down at like 34, 35 is a little bit scary. And maybe another level around 37. Oh, and that's why you're calling out the 37. I see that. I see the support at 37. And then it has nowhere to go but up, right? So what she does need to do is, as soon as it hits 37 and then double down, maybe I'll jump in with her with a call or two. I'm just not bullish overall on Neo, which is super hard to. So it's super hard for me to do that kind of thing. So nice having like at least a community of people that are gonna pay attention to some of these. And the SPY, like it's so crazy just being out for like literally 2 days. So I spent Thursday like literally while I was sleeping, like the SPY just, that is insane what happened with that, and then came right back. But I guess overall for the week it kind of traded sideways. But I didn't even go back and see what I missed. To me that looks like policy change. Maybe something more on taxes. Oh, so I'm gonna put this out here. This is one of my guesses. What I think could happen with the whole tax thing. So my bet is, and it's possible, I don't think it definitely, but I think instead of just having the long-term and short-term capital gains tax, the way that we've been seeing it since the government really wants to squeeze some more money, especially out of investors, I'm thinking we may see a tax that taxes our account values at fair market value. So I'm pretty worried about that, but I think it's something that could happen. So so you may see some tax when you haven't even sold a position, which is gonna suck. Hopefully they don't try to do that with like housing or something else, because that would also super suck for a lot of people. But I don't see it as totally out of a possibility there. Because there's some situations where you do transfer, like when I was talking to my CPA about transferring stocks between accounts, sometimes you can just get it, like it'll be fair market value. So so I would be taxed like at the time of the transfer for the difference, even though I hadn't sold the stock. And what are actually I'm kind of curious, what are 70,000, what can you afford for what can you afford on a Tesla Leaps? And as always forgive me because I never use the desktop version, hardly ever. Ooh, they're still expensive. Good lord. Oh wow, that's actually not bad at all. So you could actually afford 2 of them. You could afford 2 Leaps. How do I see the? Let me see. Okay, there we go. Just wondering where the delta is. So you're like a 620 or something like that. 620 for 22,000. That's a 0.7 delta, which is the correct, like technically correct number on a Leaps. Boy, you could grab 3 of those and then start selling calls along the way. That'd be super cool. That'd be awesome. I'd be down to do that. Is it safe letting your credit spread expire on Robinhood? What about after hours? Yes, no. So if it's super far out of the money, okay, so if it's super close to the money, they'll automatically close it. Like if you're in any danger of expiration. 2, go watch the video. Find the video about the kid who committed suicide over like his Robinhood account. So basically, like everything didn't reconcile, and I can't remember if that was the whole case, but like worst case scenario is like after hours, let's say the stock price moved, and then one option is exercised against you, and then after hours Robinhood doesn't exercise the other one for you. That could be a bad thing. So if you're, in my mind, if you're that close, I just, unless it's super far out of the money, I just close them out on Friday, because you're closing them generally for $2, unless it's like a so like that's on something that's highly volatile. So on a Tesla or Amazon or something like that, something that moves, I would close those out and just, oh well, it's $2. Close them out or roll them. If it's something that doesn't move very much, like SPY, Apple, something like that, and you're super far out of the money, I would let those things, I have no problem letting those expire, because I don't expect a crazy move after hours. So yeah, it is safe, like for the most part, but I don't think it's worth any kind of risk, just in case some crazy news comes up like right after hours, and the stock happens to drop or skyrocket up or something like that. Not worth it for the couple dollars you're gonna save, I don't think. 848 break even price. I don't think that's bad for a 1 year. So what do we have? We have $9,000 worth of intrinsic value on this, right? So you'd have to make up like 1,300 or 13,000. Yeah, I guess that'd be quite a bit. But that's also if you're thinking it's gonna stay the same too. I don't know. Or just buy it. Just, I don't know. It depends how bullish you are though too. Like if you just think it's gonna do well by June of next year. So I think this is how I would play this. This exactly, like if you just wanted to do kind of the set it and forget it, and I don't know how active you are with buying or selling them. So I would grab one on a down day, and then I would wait for a tick up. I mean, not a tick, like a day like today, and then I would sell the one above it and turn that into a free debit spread. And I would probably do that on repeat, because that's quite a bit of equity. And 848, I don't even think that's not something ridiculous. I mean, if we're not $800 by the end of the year, I'd be super shocked. I just like them too. It secures your place, and like I said, the scariest thing for me is being left in the dust. Like rockets up to 900, and then all of a sudden you have nothing left. Like then you're just like buying them for 50% more, which is exactly why I did that on Palantir. I just wanted to secure my $20 price. Paid a few $100 for it. I mean, that's definitely a lot more for that, but your losses aren't all that much either. Just let me see. I'm gonna grab a calculator. So we have 6, and that was the 620, so 90, so that's $9,000. 9,000. 750. Stupid Tesla. Well, also you have to realize that the premium's got to be up pretty high, like after the move on Friday too. So you should be able to get a better deal than that with like a little bit when the IV is down a bit, 65% IV. Let's see. Let me look. was the daily? Yeah, it was a huge move. It's like a $50 move throughout the day. Oh, that's what I wanted to see. What's the premium you can get for then selling the call? So we are first. Let's that. You could do that. Look at that, though. You can sell. So let me grab my calculator again. And let's see. All right. So with that one, we have. It was 22,000, right? 22,000, and you have. We figured $9,000 worth of intrinsic value, and then that would be what, 11 months, 12 months, 13 months. Yeah, so exactly like $1,000. Yeah, you could totally do that. You could grab $1,000 a month. I mean, that's almost $100 out of the money. And if you did it like bi-weekly, yeah, I like it. So in case you're not following along, so what I'm doing is I'm looking at a leaps, right? So I'm looking at a call that we can buy super far out, and because of the time, that's going to cost some money. So the intrinsic value is basically what that call is worth, like right now. So the price difference between the 620 and the 710 that it is right now, that has value right now today, because that's the price difference. So the extrinsic value all that time is what we want to make up or make it free. So now what I'm looking at is, okay, what's the scenario if you buy that and then you just sell calls against it, right? So basically it needs to be $1,000 a month, and then that's all free extrinsic value. So basically that leaps would be free even if the stock price didn't move one iota, but that's not the reason that you would buy leaps in the first place. So you're still selling them bi-weekly, 75. I mean, that's $75 out of the money, and you're still, and you can go like a little bit higher, a little bit safer. That's still a fantastic setup. I like it. I really like it. How risky are credit spreads with a wider spread between those two strikes? Also, how does theta work with those? Well, the wider the strike price, so it depends how wide. I mean, it's essentially less risk, because if the long side is like way down to a price you'd never hit, that would be less. But obviously then you have that same collateral, so you can do a ridiculously wide thing on this, like the SPY, and if your long side, we'll look at that. If your long side is like way down there, it's probably not going to hit 100. So let's look at it. But that's the point. The point of a lot of the times, and kind of what I use it for, is the fact it's very good premium to collateral. The wider you go, the less premium you're going to receive. So like, you look at out a month, out the money, and let's see, and we do like just a $1 wide spread, we can get 36 cents or $36 credit. So that's over a third of your money there. But like, if we look at what $1,000 brings us, so we'll do a 417. It doesn't let us do 407. Or maybe it just does the major one, but we'll look at something close. So So $1,000 wide, so a lot more collateral, a lot more safe because you have a lot more runway to the downside. But now you're looking at 24%, which is quite a bit less than a 30 some percent. And then how does theta work with those? I mean, it's still basically, that's the decay that you receive every single day on them. Like you can see it, I think, I don't know. I don't know on this version on the desktop because I only use it when I'm doing this. If we can see the actual, I don't think you can show, you can't see the theta on here. But like on my other ones, you can actually see the theta. So it's just a certain amount. And then it should, how's that going to decay? It should decay slower. So you should have less theta. Yeah, you'll have less theta on those because you have less to gain relative to your premium. Tesla moving $30 to $40 swings. Would you say put credit spreads above 660 are too risky? Yeah, I mean, it depends on how willing you are to manage them. I have been really liking that 660 level. Like it's been a very comfortable pick. You can see I have them all over the place, but like you can see these ones I did for 5.7. I have 10 of those. Well, I have 13 put credit spreads at that 660 level. No, 13, 14. One below. So I don't have too much higher than that. I like 660s. Alex, what's up, man? You rolled your Tesla down to 605, same expiration, wider strike, more premium, more collateral. Tesla's pretty easy to roll in terms of fills. Oh yeah, I find it super easy. But I also hear a lot of people saying they have a lot of trouble rolling them out, and I don't get it. I think maybe they think they're supposed to be a credit when they're supposed to actually be a debit. Looking at a 373 long and 737 long, 735 short call. Credit spread. What, you're gonna wait after Saturday Night Live? Do you think Saturday Night Live is the catalyst for what happened on Friday? I think it might. I think it very well might have been. But the only thing I'm scared of are people expecting some announcement to happen during Saturday Night Live. It doesn't happen. Then everybody's disappointed, and then it falls on Monday because nothing crazy happened. It's so weird. So weird that such a thing would affect stock price, right? But if a tweet can affect crypto so crazy and everything else, why not? Like, is he going to roll out in the new Cybertruck and go, by the way, it's available today? I actually can't wait to see it, what kind of skits he's in. Oh, and Brandon, I don't think they're too risky. I think I had some up there. I closed it out once it went up, but I think those, like the 690s, as long as you're willing, or above 660s, as long as you're proactive about rolling those out, even when it's below 700 recently, I don't think that's happening for a long time. So I don't think it's taking a dive and then staying below 660 or 650 for any period of time, which if you paid a little bit of attention to like a few weeks ago when we knew we had like all the catalysts coming out, and I had several spreads that were in the money, like they all looked like losers, but I was perfectly confident with them. It was because of the down, and kind of felt like they were going to come back up just based on everything that was going on. So those were like super comfortable for me. Always visit Grandma and Grandpa. Grammy and Grandpa. I've been doing well with my weekly put spreads. I only notice you tend to do further expirations and roll rather than allow them to close out of the money. Yeah. I want to reach your level, and I'm curious if farther expiration and rolls are better for account growth. So it's all give and take, and I've definitely adjusted. I don't let them expire generally because the last day, especially the last few hours of the day, for a few reasons. So one, that last day or two, you're collecting very little, and I don't know what you're doing spreads on if they're on Tesla. There's not much premium to collect, so I don't need my $1,000 worth of collateral sitting there to collect another $4. Like, to me, that's ridiculous. That's not making any money. And then if they're anywhere that are close to the money, I also know Tesla can move $30, $40, $50, $60 a day, $100 in some cases. So I just don't want that risk there, which is why I generally move them. But I did have, I think, like Apple and my SPY put credit spreads, like those all just expired, which are fine, because those I'm not really anxious to put the collateral back to work necessarily. Further, just more extrinsic to help with rolls, yeah. My name is Danny. What's up, Danny? You're not always visit Grammy and Grandpa. This is a channel where I'm teaching my adult children to retire early so we can see our grandkids regularly. That's super awesome. You're going to start closing spread sooner, like 60%, honestly. Yeah. For me, it just depends on the recent price action, which is, I know there's definitely like statistical rules. One could be better and one could be worse, like statistically overall. But yeah, it just kind of, like, for me, depends on what's happening recently, like with those. I'm glad that huge drop phase is over, and now it seems to just be choppy, so I'm more confident in those, and I'm also more confident that I can roll them out for a shorter period of time and then see it bounce back up. Yeah. I do have many 660s, and I bought one debit spread too. I bought one 745, 750. So we have a lot of those 675s. We have 9 of those. And let's see, following week, 640s. I have some 680s. I have 8 more 660s. Then I have my 2 covered calls. Actually, I have a couple SPY put credit spreads. 10 of them expiring the 21st. 685, 675s. So those ones that are higher, anywhere closer to the money, those are the ones that I'll roll out sooner, since I still have that extrinsic value on my side. Where the ones that are farther down, I can wait till kind of the last minute. Did I make any other earnings plays? No. No, unfortunately, because this week I was totally wiped out from the stupid second dose of the vaccine. I was like literally wiped out all Tuesday, Wednesday. Yesterday was like super half-assed. Today I'm not feeling awesome. I didn't. I was going to on Tesla. I was like, and I had a strategy in mind for it, but then after the tax thing came out, like, it kind of messed with me a little bit. I was like, that was pretty messed up. I'm feeling like so much. I'm feeling so much better than the last couple days. Still not 100% though. Like I feel sore, but my joints were all aching. Felt like I had arthritis. Felt like I did like a super good full body workout, even though I hadn't. And then just like plain old tired. I've never, like, I haven't slept a day away in 15, 20 years, maybe like after a super bad hangover or something like that, like way a long time ago. But that was the last time I've actually slept that much time away. That part sucked, but I'm glad it's over. And then since like I was all sore, I actually went kind of weird thing, but I went to my massage therapist, which I've been going to for 9 months, a year, like almost every week, which I very much enjoy, just because it's a time when I get to, like, phone is off, work can't call me, everything's quiet, nobody's talking, and all that. Like an hour out of the week, that's like, I almost feel like it's like meditation time, and I was super looking forward to it just because I was extra sore. And then after 9 months, same place, my massage therapist was inappropriate with me, which really sucks. So now I probably have to find somewhere else. Yeah, I saw Doge was up. How is it doing? 36. I only have, what do I have? I sold most of mine. I have a whole $130 worth now. Because I sold it when it was up last time. Altcoins. It's weird, I haven't even looked at. I've never even seen this screen. Dogecoin, Litecoin, and that's the only two. All my reoccurring investments. Weird. Can you explain put credit spread? Thanks. Yeah, sure. Okay. So the basic of, let's try to give you the simple part. Put credit spread, basically you're putting money up, which is going to be called collateral, and that money is at risk. And for putting that money at risk, you're going to collect premium. So, for example, you might put $500 at risk, and you might collect $100 for doing so. And this part is actually pretty simple. So you can see any of these Tesla put credit spreads. So we'll look at one of these. Oh, never mind. That is a debit spread. All right. And let's make sure. Let me see. Okay. So here's a put credit spread. This is one that I sold. So I sold a put at 650, and then I bought the 640 back. So the difference in the price, these two, this is a $10 price difference. All options are priced in at, it's 100 contracts. So whatever numbers you're dealing with when you're seeing 75 cents, it's actually $75. I don't know why they just don't change it. But because it's $10 difference times 100, that's $1,000 worth of collateral that I put out. And for putting that $1,000 worth of collateral out, I gained $137 into my account. And if Tesla does not go below 650 by the expiration date, which is 5/7, so next week, if it's not below 650, then I get to keep my $137, and then my $1,000 worth of collateral I get back. And then I get to do it again. Then I can take that $1,000 worth of collateral and do the same thing, collect another $100 and something. And then where you can lose on these, so that $1,000 worth of collateral, let's say it went down to 640, 639, and I didn't do anything other than just sat there and watched it happen, I can lose all $1,000. I still keep my $137, but then I can lose all all that collateral. The thing with put credit spreads though is you can manage them, so you can roll them out, you can move them. So let's say I saw a price action moving against me, so I could either take this thing, and right now it's expiring on 5/7. I could roll them out, which just means basically changing the date, and since Tesla price right now is above this credit spread price, I'd receive additional credit. So I could take this and move it out a few months, and I would probably grab another $100, $200 worth of credit. So that's one of the options that you have. The other option is moving it down, so I could change it from a 650, 640 to a 610, 600. That would cost me money. But there's several things that you can do with a put credit spread rather than just sitting there and waiting to lose $1,000 if it's going against you. And then a call credit spread is going to be the exact same thing, just on the opposite side, to where you're saying, okay, I don't think it's going to go above here, and you can take that position. You're basically entering this position, you're providing liquidity for somebody else, because if this goes against you and it moves down to, let's say, 630 and it expires, you are responsible for buying them for 100 shares at 650 and then selling them for 640. That's why you have $1,000 loss. So you're basically providing liquidity to the market in that respect. But there's a ton of like step-by-step really good videos out of there. The first time, and if you're very new to it, don't expect for it to all sink in at once at all. Options are confusing at best, I think, initially. Even the basics of a call or a put. Sometimes it probably sounds like if you just jump into a channel like this or a talk like this, it sounds like we're speaking a foreign language. But hang out, watch enough videos, and you'll get it. It'll all make sense once, down the road. Don't expect it all. Just like learning a new language, you start to pick up little pieces until you can actually form a sentence and understand it. I started closing my spreads at a limit price to capture 70%, good till close. If it doesn't hit that by the Friday before expiration, I just roll it out. That's good. I think it's really good when you just do the exact same thing. Excuse me. Exact same thing, like one after the next, because I definitely don't. I probably do it the wrong way by using my feelings or my thoughts, but that's what I did. I did 2 earnings play on BSX and Cat. How did Caterpillar do? Have they already reported? I guess we should be able to see. Oh, they did. Holy crap. Wait, so they report good and then it went down? God dang. Market is so confusing. So like Tesla, they beat and then went down, right? Estimated 192, actual 287, and then just tanked Thursday. I guess that's all relative. That's not a I guess huge number move. They're still up there. Yeah, what did you do? Did you do straddle? Yeah, it's yeah, to understand spread, it's so weird how they become they go from this concept, and I think you have to do some too. I don't know if that's true, but if you jump on, I think WEBULL probably has it. I know Thinkorswim has it, where they have paper trading, and then you can at least like open some up, see what they do, see how they move against you. I was willing to use my own money because I feel like I just learned better, and I felt like if I lost a few $100s initially, oh well, that's just the price of education. But I think paper trading's pretty huge. I think the basics of a credit spread are so simple though. But if you're just finding out about that, unless you know the underlying, like if you really need to know the stock or the underlying that you're doing it on pretty well, so you know what to expect. And then you need to pay attention to like ex-dividend dates, earnings, any events that would significantly move it. Up 4,100 on Doge. Nice. I don't know. My girlfriend's up on it now. I haven't even asked. How do you put credit spreads compared to debit spreads, risk or profit? So an out of the money debit spread, it depends if you're in or out of the money. If it's like a deep in the money debit spread, the risks are going to be similar if you're doing out of the money put credit spreads. But all in all, every single trade that you will make in the market is going to be fair. So risk is going to be always inverse to the reward. So like you can do a debit spread for like 11 cents or 8 cents that could potentially make $1,000, and it's extremely risky in the fact that you're probably just going to lose that $11, but the upside is huge. Where the put credit spreads, like I like them better because you can actually manage them and you can do something with them. The only thing you can do with the debit spread is close it out pretty much. So I use, I think almost every debit spread that I think I ever do is something that's it's just like pretty much something that's very risky. Like I had ones expire this Friday and they were like, hey, I'll spend $100 and I'll buy 10 of these, like 10 cents, 15 cents a pop. If Tesla happened to just like rocket right up, then I can make a bunch. And if not, oh well, I only lost a couple $100, where all my put credit spreads, they're relatively safe. What about getting exercised? If the market price dropped below your short strike price, is it possible someone might want to lose, might want those 100 shares? Possible, not probable. Because if there's any time on it, that option still has its extrinsic value. And someone's going to probably hold on to it for that. But I've only been exercised once, and I've had several spreads that were like way in the money, like a ton of them. So it's possible. And it was on, let's see, it was on McDonald's, I think, and it was like literally a year ago or something like that, first time I ever got exercised. Yeah. And dividends, and you can be responsible for paying out a dividend if you get calls or shares called away, which is a crazy thing. But that's because you're already earmarked for receiving those dividends, and then the stock goes somewhere else, and then you'll be paying those dividends to somebody else. So it's possible, but I don't think I've known anybody who's gotten anything exercised on it like a long time. But if you're during ex-dividend, you're right. Like dividends, I think, are the biggest the biggest difference. Like if the dividend is worth more than the extrinsic value, then yeah, they'll probably get exercised, because they know by exercising that they're going to gain like 30 some cents, and an extrinsic value is, yeah, let's see, from an iron T-butt. Yeah, I know. I opened up the those AT&Ts like right before ex-dividend, and that's like all that was showing up on my Robinhood for like a week. You may be responsible for these. Oh, wait. Put credit spread as a long position. Put debit spread as a short position. Yeah, it's funny. I only use debit spreads for the call sides of things. Maybe I'm just overall way too bullish on the market as an overall, or maybe it's somewhere stuck in my head. Stonks only go up, so I've only used the debit spreads on the call side. I don't think I've had any put debit spreads. I don't think so. Yep, stonks only go up. Dang it. Well, it's pretty much true over time, right? Unless, I don't know, it's something that's like completely phased out, but maybe like Atari. Do I roll naked calls? No. I roll out my covered calls. So like every week I roll out all my poor man's covered calls, my stock covered calls. I roll all those guys out. All right, Alex, have a good rest of your weekend. Thanks for stopping by, man. Appreciate you. I did a call debit spread on Tesla when it dipped this week in the money now. Okay, nice. Good. That's Dave, that's what I did last, was it like a couple weeks ago? I did the same thing. I ended up I can't remember what I was up on those, but it was something like 800% or something like that. That's good. And those are always the hardest to do. Can you highlight the poor man's covered calls? You like specifically the ones that I have in my account right now. You want to see those? We'll go through because I just did all those ones. If you look, yeah, the video yesterday, I just rolled a bunch of these out. So these are all ones I rolled out till next week. So AMD, that is a poor man's covered call. I have, actually that is now just a straight up, that's a straight up calendar spread because I have a $95 call. This isn't a proper one. DraftKings, that is a poor man's covered call. I don't think I have that expiring until 2023, I believe. Gap, that is a stock covered call. I own 300 shares of those. MGM, that is a stock covered call. Palantir, I believe that is a stock covered call. Snap, that is a poor man's covered call. I own Leaps on that. Tesla T, AT&T, that's stock covered call. And what else? BNGO, that is a stock covered call. Dropbox, that is a poor man's covered call. I own Leaps on those. Fun, Cedar Fair, those are that's stock covered call. Open, that is a stock covered call. And since that is it's a poor man's covered call. I want to do, and actually I really want to do a video on my Palantir, even though we're down a little bit on this one. I want to do one specifically on this and kind of go through everything on this one. You want an explanation on the poor man's? All right, poor man's covered call. So you buy a Leaps, which is basically a call that's in the money, and it's far out. It doesn't necessarily have to be a year, but usually it's a year or more. So this one I have expiring June of 2022, right? So a call gives you the option to buy stock at a certain price, right? So this gives me, for $700 or whatever I paid for it, $820 at the time, gives me the right anywhere between now and June of 2022, so 13 months, I can buy Palantir at $20, no matter what it does, right? If it goes up to $80, I can buy it for $20. If it goes down to $19, I can buy it for $20. But of course, at that point, you wouldn't. But by owning this, what it does is it gives me the ability to sell calls against it. So because I have the right and I've secured it and I've paid this money, this $820, I can then sell calls against it, so which gives somebody else the right to buy them from me at a given price. So I think right after, I think I did this kind of like a standalone. Let's see. So where's my Palantir? I think I did too many. Which one did we do? Was it this 28? I know I sold it for 43. Okay. So because I have that one, I was able to sell this call, right? And it's normally to sell a call, Robinhood won't let you do it without either owning the shares or a long call. Some brokerages will let you do it with enough cash, but Robinhood won't. So then what I did is I turned right around and I sold this 528 basically a month out for $43, and I sold it against that long call. And the reason it's called a poor man's covered call is because I bought the right to do this for $800, where normally you would need 100 shares, which would be a normal stock covered call, which at the time $23, I would have had to put out $2,300. And then so every month, in theory, let's say I can keep selling and getting around $40 worth of premium every single month up until 13 months. That's about, what is that going to be, like $400, $500. And then at that point I'll have like $300 left that I paid towards that $20 long call. So if I paid $300, if we go back to looking at that call, this is a really cool part. And this is what I want to actually do a video on, just this, because this is the super cool part. Because so now June 17th comes 2022, and let's say it has not moved one stitch, right? It's still at $23. Then I still have the right to buy them for $20 and sell them at $23. So that's $300 profit there. And if I've already collected over $500, then I'm basically like break even on this. And that's without it moving at all. If it moves to the upside, then I'm just golden. So it's something that ultimately that you would be bullish on. So I expect this to be $30 some come this time. So in addition to collecting the premium on it, I've secured the right to buy them for $20, and I actually do want to buy them for $20. So that's the other component. I don't really care if Palantir goes down. I buy some every day. I want to own 1,000 shares of them. This is my second favorite company to own. So hopefully that explains it. I want to do a proper kind of like write it all out and spell it all out, exactly how it works. But it's a great way, as long as you're on top of making sure you're selling your calls and rolling it out. And then the worst case scenario too, let's say if I didn't manage it and I had those $28 calls that I had sold, what happens then is I have to sell the 28. It triggers this one, which would buy the shares for 20, sell them for 28. That would be an $800 profit. So I would have lost $20 if I didn't do anything with it. You would be Rick Roll for 3, 2, 1, huh? Okay. Boy, how long have we been going here? Let me see. Where is it at? How laggy is the stream today, by the way? I didn't get as many. I used to get like last week. I think I got a whole bunch of notes that the stream health sucked. Not so much today. Couple. Says it's good. Nice. But I think Poor Man's Cover Call is such a great way of like not having to worry about a stock going like too far up if you do want to buy it in the future. That's like at the very basics of a call. I think that's what it should be used for. It's kind of like buying a put. Like that's really should be insurance for if you have a large position for that going down. Good. Awesome. Boy. All right. Anything else you guys want to talk about? Any questions for me? I barely looked over my my questions this week. I just absolutely beat. Kind of sucks. For my Tesla put credit spreads, why don't I like weeklies? Because of the volatility. They scare me a little bit. So the risk to reward isn't that great. And it doesn't give me time to manage them. Like all the extrinsic value is gone. Like if you have a major dump, extrinsic value is gone. Just a ton of movement, especially like right now, like earnings coming up, or when it was coming up. Now that we're past it, who knows? So I just like a little bit more time to manage it, and still, like, you can go out a few weeks and still get a 20% premium for a very reasonably out of the money put credit spreads. So if I can make 20% on my premium a few weeks out with some more safety, that's just a better place for me. And I like to keep them, unless they're like super far out of the money, I don't want them like less than like 5 days till expiration. And not to say that I haven't opened any weeklies, for sure I have. But it'll be like, okay, it's Thursday, I don't want to make any more moves, but I have this extra collateral, so I'll go ahead and open one up like that week. So like whatever it was at, it's like 700, and then I will open one up at like 590 or something, right? Collect an extra 10-20 bucks or something, like really tiny, just because there's nothing else to do. So yes, I have been doing 2 to 3 weeks out recently. For a while I was doing them 4 to 6 weeks out. That's technically the correct amount of time to do them. And it's all going to depend on price action, like a lot. So if we get a spike up, if we get a spike up and I'm uncomfortable, so let's say Tesla goes to 900, I'm going to be scared it's going to drop back down. So at that point, I want way more time, and I need that time to be able to make a decent amount of premium on my collateral. So I still want to see about like 20%. So if it's at 900, I'm still probably going to be selling some maybe 750s or 690s or something like that, which I'll need them to be a ways out, because if it hit 900 all of a sudden, I'd be just scared for it to come tumbling back down quickly or slowly. What's my furthest out credit spreads? Initially, when I opened them for a long time, they had been about 6 weeks out. Right now, 3 to 4 is fair, and I roll them, except for ones that I roll. So they'll be out when I'm rolling them right now. Depends actually on the price action. So if they're close to the money, I'll probably roll them out a month, 3 to 4 weeks, fair. If they're super far in the money, like what happened when we kind of crashed down, I move those out till the end of the year. And yes, I do. Yeah, I totally do stagger them. Yeah, if you want to see, like, and I have some expiring all the way at the end of the year. These are ones that I have actually, and I have quite a bit that I push. So I have 35 700 690s expiring January 21st, 2022. Those are ones that I rolled out while everything was like just crashing down. I rolled those out for a credit. When things were down, they were down to what, 500 and some Tesla was. So, and these I had opened up initially, like just a 4 to 6 week time frame. And then when everything was going down, I just rolled it all out. But yeah, everything else is staggered. They're staggered not only in strike prices, but dates as well. And it kind of just, it keeps a range of risk for me. I don't want to bet it all on one. And then I want some of them to be able to comfortably collect all the premium, while others I don't mind managing. I don't know if maybe the best thing would have been just a super wide spread every week or something like that. But yeah, so 5, 7, you can see we have 4, 5, 6, 7, 8, 9, 10 expiring next Friday. Same thing the following Friday. Those are 2 weeks out, 3 weeks out. I have a few of those. 4 weeks out. What is it? 6. I have like 20 some expiring 4 weeks out. 618. We have 5 of them. And a lot of these just got rolled out to where, and then the end of the year. A lot of them just got rolled out when Tesla was like just moving way down. So I just like rolled them out as far as I needed to in order to collect a little bit of a credit, or cheaply rolled them out because I didn't want to lose the collateral. Do I use the Black-Scholes equation? Nope. Not maths. Just got here. Can we talk about watch sales? We can talk about it as much as I know and what I saw based on like what I got back and the explanation. When I had Sarah on, she talked about it. So I think the explanation of a watch sale was pretty broad, but after seeing my statement, it was pretty clear. So like when I did get assigned on one of my credit spreads, that was a wash. So basically, like if you lose on a credit spread, that will be a wash. But I'm not a tax person at all. I barely wrap my mind around a lot of it, and it takes a couple times. But man, CPAs are worth their price, 100%. Oh, it hasn't buffered at all? Nice. About how many times would you recommend rolling out a spread? Hopefully forever and ever. Like I have a bunch on Tastyworks that I've been doing for 11 months now. Like I do them super far out of the money. It's super safe. And I started my Tastyworks account. I was like, hey, this is pretty cool. I did this, and let's see if I can do it again. And I think I started with $600 in there, and I don't even know how much is in there now. I know I've at least 10x'd it or 12x'd it or something like that. But I've just been rolling, and then building more out. So, and I usually only roll them out a couple weeks or so. So just keep doing it. Can you look at your Robinhood account and see if rolling a credit spread is showing up as a wash sale? Let me see. Can I do that? I know I had a huge, I will look. Check out my documents here. Robinhood Securities. Okay, so we're good Lord. You know how long my report is? It's 344 pages from Robinhood. Okay, let me see. I know I saw Wash here before when I peeked at it. Wash sale lost disallowed. I don't even know where. I actually I don't know. Talk to you know what? Talk to CPA. I just don't know, and I don't want to put too much stuff in there, but let me see. Make sure this is nothing. Cost basis. So all I know, let's see. This is all I know. Like, there's the wash sale here, 850,000 basically, and I don't know. Oh, I see. Okay, so finding the document. Let's see, wash. Dude, wash comes up 100 or 344 times. Let me see. Oh, because it's, let me see. Wash. Short sell, close, call option written. I don't see my rolls coming up as washes. The only one I know that came up as a wash for sure was when I got assigned. That's all. CPAs kind of suck. I mean, there must be some way you are getting by these wash sales. I know you kill it. I love your strats. I want to do the same thing. Man, CPAs are so great. I love my CPA. Contact her. Hey, greetings from Germany. Just got assigned on skills. Would you sell a covered call at 18 or 1850? Wow, Germany, awesome. My uncle was stationed over there. My ex, her name was Mädchen Baurichter. So I know I've been told a million times that her name means girl, but she was actually named after a Mädchen cow. Where is skills? Ooh. This is one I have not been paying attention to. Let me see. Did you say where'd you get assigned at? So, and without even seeing where you're assigned at 18, I would probably, like, personally looking at this, I would sell the 18 because this looks like super volatile. And I mean, you probably know way more. I hope you know way more about it, but it looks like it's just down, down, down. I don't know if you expect something to come up unless these are shares that you actually want to own, and I don't think you should sell puts on things that you don't want to own. But if you don't want to own it, sell it at 18, get rid of it. That way you have your collateral from your put and then your call, and then you're collecting a little bit more in case it goes down. I ran into the exact same thing with BNGO and United Wholesale Mortgage. I had sold puts on them, realized I didn't want to really own them. And then so I've just been selling calls like at the money or super close to the money, just like hoping to get assigned on those. Where my puts, when I sell those, I hope to get assigned and be responsible for buying the shares. That's on some Twitter put credit spreads. What have they been doing? I don't like Twitter. I'm not. Oh lordy. Okay. It looks like probably a good time to sell some, actually. Holy crap. Wow. This is what happens when you take a few days off to recover from a vaccine. Holy crap. I can't believe I missed that. Oh. You know, all the German I learned was from Wolfenstein 3D. Most of it. Jeez. Yeah, that's probably a cash covered puts would probably be pretty nice there too. Especially like with that kind of volatility. Holy crap. Was it just wait, where was there okay. Oh, wait. What happened? So they beat earnings. What was the other? Why did they drop so much? I just hate their censorship. That's the only thing that drives me nuts. Of course, Kathy loaded up. She's like super queen of buying dips, though. That's like the right thing to do. Just need to build a bot that all like X amount of drop, buy. That's all it needs to do. Put credit spreads probably juicy. Cash covered puts probably juicy. And like cash covered puts right now on Twitter probably awesome. Okay. Oh, because active users were lower than not to be. I think a lot of people abandoned it because of the censorship was probably part of my guess. It just sucks that there's not an alternative to get the kind of feed you do from Twitter. I would love to completely run away and not use it, but some stuff I just want to keep up on and see what someone's opinion is right away, and it's the only place where you can do. You can just $ certain stock and get a whole bunch of people's feedback on it. I actually originally started using it because there was a local brewery that had rotating taps, and that was the way I kept up on what was coming up. Man, cash covered put just looks, yeah, that does look super juicy. Is it pretty good premium on it too? I wonder if that old resistance is going to become the new support. May have bottomed out there. Good Lord. That is a drop. Let me see. It's so crazy, like keeping up every single day on everything that's going on, and then I miss one day and then stuff like that happens. Like, geez, Twitter. What are they, like a month out? What are you getting for? Oh yeah, 500 for 10%. That's not bad. I'd be tempted to do some at the monies. You got some 50/45s for June. I'd be so tempted to do some at the money, some 55/50s. I think you're super right about that too. That's a tough one. I don't know. I like it though. That is such a crazy drop though. Why does it look all funky in this? Because I never use it, that's why. Because Thinkorswim is better. You have some 5352s from May 7th. Those should be pretty good. I just hopefully they don't get a crazy continuation. But that's pretty tempting to play. I just don't follow it enough. I don't know them inside and out like I know Tesla, which makes it super hard. Yeah. That end of the day move, like, the end of the day move, did that like coincide with SPY or anything? SPY had crazy moves like on the thoughts on Nikola scam. Yeah, that end of the day thing. So it like came down. What time was that? Let me see, 12:27. It like came down with SPY and then just didn't come back up. Nikola, I can't believe Nikola's still a company. It's absolutely insane that Nikola is still a company. That is just not gone after that whole thing. I don't even know, like, how much? 20. Good God. They're $70. Now they're $11. I don't know. This is like Hertz Rent-A-Car or something like that, or J.C. Penney's. But what does Nikola do now? Like, since everything they were doing was fraud, right? Like, pretty much there was no anything. I don't even know what they're doing. I stopped paying attention when I saw the signs like really early on, and I wanted to buy puts on them when they were given the what was that girl's name? The one with the patch that tested your blood and injected Thanos. Like when I saw those, yeah, the Thanos vibes from them. But I don't even know what they're doing now. So are they still like trying to push the whole hydrogen thing? Yeah, Theranos. Thank you. I want to say Thanos, Theranos. Yeah, but I honestly have not even paid a bit of attention. Like when Trevor Milton was going through his explaining things, there were just certain things that didn't click for me, that just didn't make any sense whatsoever. And when that happened, I was out. Trevor Center has built 2 fueling stations in California, but still all whatchamacallit? Baba, I haven't played Baba in a while. Wow, Baba's definitely off all-time highs for sure. Do they have earnings coming up? But they're still like hydrogen, or are they gonna move into electric? I should pay attention a little bit, see what's left of their company, see if it's interesting or not. But since I'm so heavily into Tesla and they have their crap together, I feel like they're going to be the truck to have, I would imagine. Not their not a Nikola, but I don't know. Nikola could turn into revenue machine if their trucks get past all the safety tests and begin to sell Q4 this year. Are they ready to sell Q4? Do they actually have trucks? So like the last thing I remember is them showing that they're like, even their trucks driving was fake, that they pushed it down a hill. And that was their demo. So I don't even know if they have real trucks, if they are electric, if they are hydrogen. And from everything I understand, like hydrogen is basically going to be inferior to all electric. They're focusing on more electric. Yeah, I may also take some time this weekend, see some updates about them, but not a company I'm interested in long term, because I mean, there's so many parts and pieces. The fueling stations, which I know Tesla's already installing, whatever like the mega chargers. There's that, the battery technology, the battery sourcing. Now all the manufacturers are having difficulty with chips. So like all these things coupled together from a company who knows what they actually have is going to have a way more difficult time. But at $10 it might be fun to play. Oh, they were down to 930, huh? I just still cannot believe it's unbelievable. It's still a company. Battery truck production and hydrogen station is their plan. Easy play for put spreads. Yeah, man, that overall downtrend looks terrible. I don't get Tesla. Don't they just turn a profit by crypto CO2 certificates? What is really making? Oh, oh Lord. Okay, so yes. So this, if you took out their Bitcoin and their crypto, or their crypto trade and their credits, they would not be profitable. That is absolutely correct. But what you also have to factor in is that the CEO's compensation plan, that was a huge part of a one-time amount of money that was recognized. So the next quarter, when that goes away, then they're profitable. So if you really want to see their breakdown, if you look at like Tesla Daily, if you go find them with Rob Maurer, and he explains it, he's very technical about it and explains it very well and goes line by line by line by line and shows where their profitability is. That'll show it. And they're putting a ton of money into infrastructure right now, into building new factories, and this last quarter, basically they didn't have any S or X production. So those couple things, like, put back in the S and the X. They don't need to do the big CEO or Elon's compensation. Basically, like, again, it's not in perpetuity. He reaches certain metrics, and then those tranches go to him. But then after that, they're going to be profitable. And I think it was Volkswagen bought a whole bunch more from them. So I mean, even though it's not, it is a factor into their profitability right now. Going forward, they won't need it. Yeah, Tesla's overvalued for what they do today, 100%. Expectations and their trajectory is just super high. Like, their year-over-year growth is insane. It's their trajectory, essentially. Their technology, and the amount of, like, all-encompassing, like, if they haven't been able to recognize the bulk of the revenue from full self-driving cells, because full self-driving isn't a thing yet. But like, once they're able to do that, that's another huge step in the correct direction. Yeah, if you're really interested in it, I mean, it is really cool to check it all out. But if you really want to look over their financials, that is a great place to do it. Tesla Daily, Rob Maurer. He goes into really good detail. Oh, that would suck. I would love to work for them. That'd be pretty awesome. There's so much. I have one of their cars. It was kind of cool to see my account. So I'm getting Tesla Solar. I have one of their vehicles. I have another one on order. And what was the other thing? Nope, maybe it's just the 3. Yeah, those guys. Let's see. How much time in a given day do you spend looking at stocks and researching? I just kind of like throughout the day. So I have a normal job, but I have like lots of free time in between. So kind of gaze at things, or just like listen to different feeds, or see, news on here is pretty good and pretty quick. So kind of all throughout the day and at night, but it's definitely not like my full-time job or anything. And then it also changes. Like when I got really interested in Palantir, I spent 3 days like straight watching and reading everything I could on them. And then other days, like this week, like Thursday and Wednesday, Thursday, Friday, like nothing. And that's it. It's so hard to keep up. Like I feel like you need to pick a few things that you're super interested in and do a lot of research on those instead of knowing a little bit about a lot. I don't think that does you as much good. That's why there's guys that can day trade. Like they'll just pick a few companies like pharmaceuticals, and they'll just focus on those and do super well. I love Palantir. That is like I said, that's my second favorite company. First one is Tesla, second one Palantir, 100%. But anyway, guys, I think I'm going to get going for today. Appreciate all you guys for hanging out. I do not play a lot of spreads on Palantir. I've just bought stock. So I'll show you my Palantir before we go. I think I have 326 shares in this account. We are down $600 on them. I'm selling calls on them, buying more stock, and I bought a couple leaps on them. I bought one $30 call and one $20 call for June of 2022. Oh, Richard, dude, I know you asked me that before. I think on IG too. I'll go find my document and let you know. 100%. I don't remember. It's whichever one that I don't pay myself, so I don't write myself a check. It's basically whatever I think the sole proprietorship is. My other business, so I actually have an Amazon business, so that one I pay myself, and then the type I did for the then it's a regular LLC, yeah, where it's all just linked. It's all basically like ordinary income, whatever it makes. I don't like set aside anything for the corporation. And so from my understanding, the only reason it's in an LLC is to legitimize expenses, essentially. Okay, an S Corp is where I compensate myself. Yeah, that's where my Amazon one is, because I actually had to pay myself. So, yeah. Yes, I'm an employee. Yep. Thank God somebody knows a lot more than I do. I just don't. Anyways, guys. All right, I'm going to take off, go get some weekend stuff to actually probably catch up on work that I haven't done for Tuesday, Wednesday, Thursday, and Friday, since I've been lazy and in bed from the stupid virus. Yeah, I just make the money and pay the people. That's it. Good way to be. Yeah, let somebody smarter than me that, like, literally it would take so much of my time to figure it out. It would be ridiculous. Hey, Jacob. Good to see you. Yes, you did. I don't know. Well, we'll see you maybe next week, during the week, something like that. But yeah, I gotta get going here. Go. You're welcome. This was better than the Kentucky Derby. I don't know how to take that, but thank you guys. Love you guys. Hope you guys have a great rest of your weekend. Great day. We'll see you.